Welcome, everyone. My name is Nick Hershey. I am the president and founder of the Mortgage Calculator. We are a lender that specializes in non-QM and business purpose. So by popular demand, I have created this video to show our team and anybody else out there how to set up a DSCR business loan, because we do hundreds and thousands of them over the last few years, and it's a very popular product now. So let me go ahead and share my screen, and I'm going to walk through a start to finish DSCR business purpose file in Encompass for anybody that needs to know what special fields need to be set and whatnot. So let me go ahead and share my screen. So again, we're with the Mortgage Calculator, specialize in this stuff, so you can actually go on our site. If you guys haven't checked it out, go check out the non-QM rates. You can put in any states, whatever it is, and you can see the DSCR rates, right? So this is just investment DSCR. This is what we really specialize in. And these rates you can check out on our site. Maybe throw a 5-year prepay. You can click show rates. You just got to type in your info and you can actually see our live rates. Now, what I'm going to show for the mortgage experts out there, the brokers and the loan officers that are setting up these files for their clients, let me show you how to do that start to finish on Encompass. So here I have my Encompass set up. So obviously, since we specialize in this, we have a little bit of special stuff set up. Hopefully your company has similar, templates and whatnot. So I'll try to go through page by page just to show you what those templates we're setting. But you'll see that our file is going to start off with a few templates. So first, we're going to use John Homeowner. Obviously, this is a Fannie Mae test file. Since it's a public video, obviously it's going to be fake information. This is just a test file that Fannie Mae allows us to use. I'm going to import it to my training folder. And the important part here is that we have all this set up. Again, since our company, the Mortgage Calculator, we are a lender that specializes in this. We're non-delegated, so we can do non-delegated business purpose. We can also even do brokered business purpose. So we're all about servicing our clients out there that are looking for the best, DSCR deals. Sometimes there are weird situations where we would have to broker that loan to a very specific specialty lender. So we do business purpose brokered loans. But for this purpose, since we do most of our loans in-house, which is non-delegated, I'm going to start with our non-delegated business purpose, which is a business purpose DSCR template. So I'm going to go ahead and double click this template so that gets selected for my import. I'm going to import my basic Fannie Mae test file here. So I'm going to go ahead and click that. Of course, everybody waits for Encompass. That's why we built our own API with Encompass. So usually we don't actually have to use the program. But since everybody uses the program and not everybody has our CRM and our API that we built, I'll go ahead and use this example here. So obviously I was looking for a different loan. Let me find my John Homeowner, and I'll sort it by loan number so I can find the latest one, which should be this one that I just imported. Obviously it doesn't have a loan officer yet. So this is the file I just imported with the basic template. We're going to go ahead and open this up. You can see all my loan officers there testing their own versions of this. So let's go ahead and open this up. Obviously we need to assign a loan officer. So I got a couple hundred loan officers here on the team, but let me go ahead and find myself just for this test. I'll have to change the state first there. So there's your first issue. A lot of times on business purpose loans, the states don't match up. So we'll set that later. You see here our loan program. Hopefully your company has a loan program set. So we've automatically imported that into this file. We also have this custom page set up where we have a lot of custom data specific to DSCR. So again, hopefully your company can build some of the stuff that we've built because we specialize in this. But you see here we have DSCR. We got a DSCR arm. We got a couple different templates. A lot of companies just have a conventional template. You could obviously start with that. But you see here our DSCR template set some things like the doc type and some other things here on the plan, which are already set in this file. We also have our non-QM closing costs already set. We have us as a lender already set. We can go ahead and set our investor. If we're doing a broker deal, we have to set this. But one of the fields that we always have to set here on the business purpose is the DSCR. So we have a non-QM income type. Again, this is a custom field because we do these loans by the hundreds. So we have this all built out. TRID loan, obviously this is a business purpose, so it's going to say no, it's not a TRID loan. And then here's some of our business purpose fields that we've built out as well. Once we say no, it's not a TRID loan, it's a business purpose loan, commercial loan, basically. It's not a portfolio. We do a lot of portfolios as well, cross-collateralized multiple properties. And if that's the case, we need to know how many properties, right? So that our team, when we submit this file, when our closers get it, when our processors get it, we know exactly what's going on. So these are some cool fields that you probably need to set up in your company if you haven't yet. Borrower's business purpose use of funds. Remember, to legally do a business purpose loan, we must have a business purpose use of funds. So this is a disclosure that we've built out that those of you that have done DSCR loans before probably know. Every lender and investor is going to have a business purpose disclosure. This is where we fill that in. So we have a general one that works for all of the different lenders that we've built. And the main thing is our loan officers just have to set the business purpose. So if you're doing a purchase, it's going to be acquire investment property, obviously, right? We're acquiring a investment property to generate revenue, right? It's a commercial purchase, basically. Now, once we start filling in data, we have our DSCR calculating live here. So that is going to use the rents divided by the PITIA. So if I come in here on the right and put in a rent, so say, what do we have here? This is a 20% down, 425 purchase. That's fine. Let's go ahead and put, so say this is a $400,000 house. Let's say like, $2,800 rent or whatever, right? So occupancy rate for DSCR is always going to be 100. Most of you guys that do conventional loans, 75 is usually the occupancy rate, the value that we use. But in DSCR, we're always using 100%. And then you see now we have a DSCR of 1.244. So now we know exactly what we're getting into on this file, but of course it's using some basic assumptions which are not going to be correct. So let's continue to build this out so that we can set it up properly. Now, one of the things, obviously, DSCR is not at 5% right now. That's just a default that was in the John Homeowner template for, a Fannie Mae default template. Let's go put in a more realistic DSCR rate, like 8.5 right now. And now you see the DSCR went down because the PITA is calculating. Now we're under 1 DSCR. So now we know this might be a little bit of a challenge of a loan, right? DSCR typically needs to be over 1 for most DSCR products. So this is where we can start seeing that we might run into trouble. We can also see what product we're going to price with, what lender we're going to price with by filling this out and starting to get some more data filled in. So that's really where our company specializes in, where we're always going to be looking towards this DSCR, which you do have to make sure your company sets up special. A couple other things. So there's going to be a purchase, investment, obviously. Let's go other. And let's just put DSCR here, just so we know this isn't a conventional loan. Obviously, that might give us trouble if we try to use like our pricing plugin. It's not going to automatically pull in other, isn't going to be an option. But for us setting up this file, let's make sure we set this up the way we should. Now, obviously, the purchase price, all this stuff doesn't really matter. We can put an estimating closing date. I'm not going to go through like aggregates and stuff on this demo, but let's just put, say, December 15th, just so we get some data in here. And I'm obviously going to trigger this file over here on the left, you see. But again, this is John Homeowner, so no big deal. It's a test file. So we got a date. The other big thing that we have on our custom sales summary, our landing page as a company that you guys should also set up and queue in on, is the prepayment penalty. Now, pretty much all of our DSCR loans are going to have a prepay. So we haven't checked that there is a prepay, but you do need to set this up. So every investor, every lender has different prepays. They're similar, but not always the same. So you got to be very careful when you set these up. Always tell my team, we always got to go hard. There really isn't really a soft prepay, but if you know how to set that up, great. This is how we always set it up. This would be a 5-year prepay, which is the most common, obviously the cheapest price. So that's typically what we start with quoting. Of course, if the customer doesn't want it, we're going to whittle it down. But for this example, let's put in a 5-year. There's 5 different penalty periods. In this case, the period is going to be 12 months, 12 months, 12 months, 12 months, 12 months. So now we have 5 years of prepay, 60 months. Now we need to tell it what the percentage is. So a lot of times we'll do a fixed prepay. So a lot of you guys will see the fixed prepay products, which is obviously the cheapest because it's the most restrictive. So usually a 5% fixed prepay would be set up as 5 across the board. Now, the other prepay, usually the other product that doesn't say fixed, is usually a declining prepay. So typically at some lenders, again, every lender is different, you would get a 5, 4, 3, 2, 1 declining prepay, where it would be 12, for the first 12 months, it'd be 5%, next 12 months, 4%, etc. So this is how you set it up in here. Now, the penalty is going to be based on the unpaid balance at pretty much all the lenders, right? So make sure we'll put that in there. Now, this is a typical 5-year declining prepay setup based on the unpaid balance. Now, some lenders do 80% of 6 months interest, super complicated, can't really set it up with Encompass very easily. You'll just have to calculate that amount as a percentage and just type in here, 3.456, whatever it is, so that you can kick out the documents correctly. Get with your closing department on that. Obviously, that's something that's a little complicated. We have our own, workarounds for that. But this is where you can set up the basics so that you can actually disclose a package and disclose that prepay. So make sure you guys set this up. Make sure your company sets this up properly. Definitely causes some issues with the DSCR loans, but hopefully you guys have your company set this up. So that's pretty much it for our first custom page. Obviously, if we're doing a real loan, we're going to need to fill in the buyer, seller, title company, all that kind of good stuff that needs to go in there. So those of you on my team that are watching this, please make sure you fill this in. For this video, we're just going to cruise through. So let's go to the borrower summary. This is where most of you land at most of your companies. So let's just go through this channel. Obviously, we do brokered and banked where we're the lender. So in this case, we're the lender, so that's going to be banked. Again, that was set on import, so hopefully your company has it all set up properly. And let's go through to the one setting here that commonly gets missed if you're not used to doing DSCR, vesting type. Some companies don't even allow you to edit this. So make sure your company allows you to edit this. And you want to come in here. And obviously, we're not doing individual like most, Fannie, Freddie conventional loans. We're doing officer. So John Homeowner, in this case, is the officer of the LLC or the company that we're going to purchase this property with, right? Because this is a, business purpose loan. So in this case, this was a test file by our test company, but we're not going to email anybody. This is all set up, obviously imported on the default. You guys should all know how to set this. In our case, we are the lender, so I'm going to import our lender information. Obviously, you guys might have different. Former address does not apply in this case. This person has 2 years of history at their current. You still need address history for every loan application, obviously. So make sure you fill that in. Order credit. I'm not going to order fake credit, but y'all know how to order credit for your company and whatnot. So, follow your company rules on the credit. For us as a company, remember, you're usually going to import credit because the customers usually pull their own credit at our company and either pay themselves or the company pays when they apply through the website. And then we'll just be probably pressing the order and importing that credit from where it's already pulled. If you do, at our company, guys, remember you have to authorize credit report, put what method and stuff, right? It won't let you pull credit unless you confirm that we have the document on file. We just don't want anybody breaking the law there. Remember, by law, you must have a document or an authorization. So in our company, you do have to click this. You guys might have a different setup if you're at a different company. Now, let me go down. Subject property, we'll leave it there. Let me change the state, though, because obviously this test file was Michigan for some reason. Even though I don't personally have the Michigan license to be a loan officer, the company does, right? So we have plenty of Michigan loan officers. But me, I have Florida, so I'm going to change this to Florida for this example so I can tag myself in later. But this really isn't relevant. Let's go ahead and set property type, regular detached house. Obviously, you want everything set up properly. Obviously, this is all according to your company. So hopefully you guys all have this set up. Again, this is that loan program we already set. Closing costs we already set. Hopefully your company has that all set up. Now, when we set up DSCR, one of the key things is no documentation loan docs, right? So that's one of the DSCR fields you guys should key in on if you're setting this file up as a DSCR. Purchase, same as any purchase. Investment, all this stuff is the same. Loan type, obviously I want to kick it off of conventional and put other DSCR just to tell everybody, regulators, my company, closing, processing, every department that touches it needs to know what we're doing, right? We don't want to mark it as conventional just because like Optimal Blue and Loan Sifter and all these tools we use considers DSCR still a conventional loan as far as what box do you check, because it's not FHA. But for us, make sure you mark other. That's something key. Hopefully your company has a policy on that and you guys can detect those different types. Excuse me. Now come through here. One thing to be careful that a lot of my guys get in trouble with is note rate. Want to fill that in. qual rate, if you fill that in, you gotta make sure you always edit it, right? So be careful there, because obviously you're gonna qualify on this. If you start filling this box in and you forget to edit it, a lot of times pricing engines might not fill this box, they'll usually fill this box. So if you like try to use Optimal Blue and push it in, and you leave this a different number, but you change this through Optimal Blue, you might get something out of sync. So this is something I always want to make sure everybody checks. Everything else pretty standard. Y'all should know how to do all this stuff for the most part. Total monthly payment, make sure you click in here, make sure you got your homeowner's insurance. We just got an example here. Property taxes, again, it's just a random example. Of course, you want to set this up accordingly. Mortgage insurance, you guys should know how to use that. We don't have mortgage insurance on DSCRs, so we're not going to worry about any of that. Just make sure your taxes and your insurance is set. Also, make sure insurance is usually more expensive as an LLC, guys, too. So make sure you don't go out there and throw out numbers as a regular policy. Typically, you'll need an additional liability policy when you do close as an LLC, right? So you'll have the typical property policy, and then you'll also include a little bit of liability on that as well. So a lot of times the LLC policies will cost a little bit more. So be careful there putting that insurance in. Down here, we're obviously not going to have any income. We'll talk about that later. Obviously, I'm going to delete whatever's in here because this was a Fannie Mae test file. So we'll go ahead and delete that here in a second when we get to that page. But this is just a summary, so we won't worry about it now. It's just pulling in data. It's just telling me all this stuff. We're not worried about that. Let's skip over to lender. Everybody should have this page. This stuff is all according to your company. Property information, 1 unit. Obviously, y'all know how to set all this stuff properly. Property type, we said it's detached, so it's not in the project. Again, investment set, occupancy rate 100 for all DSCRs. Always make sure 100, not 75. Purchase is purchase. We're not going to fill any refi fields. It says purchase. And here is a very, very important field. So this is where we, again, take it out of TRID and take it out of a conventional loan. And if it's a refi, obviously we're going to put the company that owns it, or a lot of times we get borrowers that purchased it with their name, not knowing that an LLC has a lot of advantages, or any kind of entity has a lot of advantages. So we'll put a personal name there. But over here, we have to have the company name. So by default, your Encompass, just like ours, is going to grab the homeowner's name, the applicant's name. But we are not, for business purpose loans, we're not vesting in their name, right? A business purpose loan needs to vest in a business. So we're going to unclick this. We're going to put, so let's say this is a fake address. So this is 5879 Gregory LLC. Most investors, name it something after the address. This is just an example, but this would be the typical business purpose loan. We need to have this in there. Tell the regulators, tell our closing, tell everybody this is an LLC loan. We're investing in an LLC. We need to make sure everything's business purpose. And again, there is no common title types, right? These are all people types of title. So we need to make sure we're doing other LLC to, again, tell everybody this is not a standard file, right? This is not a conventional file, not a TRID loan. This is a business purpose loan, but we still need to use Encompass to issue disclosures and all that good stuff. So this gets us out of, the TRID area. Make sure we know this is not a regular loan. We're investing as an LLC. And of course, if it's a refi, make sure you put the LLC name, or if it's just in their personal name currently, no problem. We need to know that it's currently in whatever name, and we're now moving it to a business purpose. So this is a very important field. Also, make sure you guys have this box checked, include lender information pages and borrower package. That gets you off the hook as well. So if you print a 1003, you want to make sure that you're printing this extra page here. This is called the lender page. So sometimes your guys' excuse me, Encompass or Calyx or whatever you use it is set up to just do the standard 1003 pages. You have to make sure that this box is checked so that you include the lender pages to get you off the hook, where this is going to be printed on the 1003. This is going to be printed on the 1003 to let us know that we are doing a business purpose loan. So very key there. Again, every lender, every investor is different. For your guys' setup, again, to be safe, I want to make sure you guys are safe. The best thing to do would be to mark this so that everybody gets the same 1003 with those pages that clearly identify it as a business purpose loan. Now down here, obviously, again, this is going to print on those lender pages. So again, make sure you mark the DSCR. I love marking that just so everybody knows we're doing something different. Everything else is standard. one of the things here, I guess I could have done on the other page, but the interest only is a very common feature. Let me switch back to the interest only. It's a little easier to put on this page. So if I wanted to switch this to interest only, we have these fields here, guys. So I'm back on the borrower summary page. So a lot of times we're doing interest only DSCR loans. So let me really quick put that in here so that you, before we leave these pages, so that you see how to set that up. So the typical interest only DSCR would be typically a 40-year. So a lot of you guys will see that pop up on the pricers. We have tons of options for the 40-year interest only. All the 40-year options are going to be interest only, right? So you're going to have interest only for the first 10 years. So we're going to type in 120 here. And we're going to qualify using the interest only payment, basically, right? So we're not gonna use the principal and interest in this case. So please don't check this, right? So make sure we're doing interest only 120 months, and that way our DSCR will get better. So in this case, our DSCR, notice if we take the interest only off, our DSCR is 0.921. If we add interest only, also we need to change the term. So interest only is always going to be, for the 40 years, it's going to be 40, and the first 120 is going to be interest only. Still doesn't change our DSCR. We're still just a tad short. So this loan is a great example of where I would beg, borrow, and steal to do whatever we have to do to get this customer over one, so that we can get a whole plethora of other programs that we can use. So interest only was a great tool. It almost got us there, but it didn't quite get us to where we need to be. So when we start doing qualifying, we'll talk more about this, but I just wanted to highlight this interest only field. But let's just change it back to a standard 30-year DSCR. Okay, so we'll go back into sorry, we had just finished the lender page. So remember, we were at the bottom here, and I was just going over that we wanted to set those fields. So these will print on the form. Let's go ahead and go to part 1. So page 1 of the 1003 obviously prints on everything. So this is going to go in the file. We're going to go through, and obviously this is all fake info, blah, blah, blah. Make sure you answer all the questions, and make sure we have 2-year address history, which we already went over. Mark does not apply if they do have 2-year. If they don't, obviously we need it. Mailing address, I pretty much, obviously this is a fake one, but I'll put same as current in this case. Military service, that's the new 1003. Make sure you answer that still, just so it gets marked. Now, page 2. Remember, DSCR loan, no income. So a lot of times customers will fill this out. No worries. Our job is to remove it. Super simple. So let's go ahead and pull this up in the menu so that we can see all the jobs, just in case there's 2 jobs, but it looks like they just have 1 job. So let's go ahead and delete this 1 job. Delete all this income out of here. We're not using any personal income. Once we delete that, now we can click does not apply. So if the customer fills it in, no worries, just delete it. Remember, DSCR, we never fill out page 2. There is no personal income used. So delete this, does not apply. There is no other income, does not apply. There is no prior income, does not apply. And boom, now we've cleared out all this household income, all this personal income, because again, remember, this is a business purpose loan. We're only using the business income on this DSCR loan. So that's the beauty of these DSCRs. This page is completely empty. We'll go ahead and does not apply, click all that. It is going to print on your 1003, but we're going to put does not apply. Now page 3, obviously this is a fake thing, so there's just some fake data in here. No worries. This is obviously money to purchase, so you need your purchase money in here, your reserve money, whatever you guys have. So make sure you set up your file accordingly. Every investor is different. Usually on a purchase, you're going to need obviously cash to close plus 3 to 6 months reserves. Usually depends on credit, etc. We're not going to get into all the different qualifying things. We're just going to go through the setup here. Now, other assets. So in this case, obviously the borrower put that they put earners money of $5,000. Great. Remember, that goes in other assets. So this is properly set up for $125,000 in checking to use, already using $5,000 that's already been put into the deal. Great. Liabilities, this is just, again, a fake file. When you order credit and import your liabilities, you guys should all know how to do that. I'm not going to go through that on this video. But remember, You do still have to pull credit on a person, the person that owns the majority of the LLC and at most lenders and investors. So you're going to pull credit, you're going to pull in their personal liabilities, and we're just not going to use those to offset the income, right? Remember, the DSCR loan is just based on the the expenses of the property, the PITIA, and the income on the property, right? So even if we're pulling their credit, no worries, we still got to be in there. The one thing we do have to worry about is mortgages, right? So DSCR does care about mortgages. So you're going to pull in credit. You're not going to worry about any of those other accounts. Just do your standard credit pull, import your liabilities, delete all the zeros and all that. But you do have to map all the mortgages. Every mortgage that pulls up on a DSCR loan needs to be mapped. Also, remember, when we pull fraud guard, we're going to pull fraud guard on the LLC or the company and the person. Whatever other properties pop up, if that person has other properties that are going to pop up, they need to be on this loan application. We need to know what loan, what other mortgage loans they have and that they're not late, right? So that's the only thing DSCR cares about on credit is we have to map all the mortgages and we have to list all the properties we own that are going to pop up on fraud guard. But also be careful, this hits a lot of people up and holds a lot of people up and makes people upset. Counsel your clients that if they have other properties in that LLC that are going to pop up, we're going to have to list them. So I put 5879 Gregory LLC. Obviously, that's not going to own more than one property. But if it did, if they had a whole bunch of properties, say they owned, Nick's greatest property management company that owns 20 properties, guess what? It's going to be a pain in the butt. But if we're going to buy a 21st property under Nick's famous property management LLC or whatever, they all have to be listed here, right? Because they're all going to show up when we run fraud guard on that LLC and stuff. So be careful there. Of course, you can omit anything that's in other companies that's not going to pop up. Because if they only have their personal, like say this is their primary home, and they don't have any other, they own 10 other properties, but they're all in separate LLCs, great. We're just going to need their primary home. And that's it. But if their LLC owns a bunch of properties and it's popping up here and we're purchasing in it and that name's in this application, we're going to need to put all 10 mortgage loans, even if they're private money, whatever they are, in here. So let me just real quick pop this up. So if we had, say, 5879 Gregory own the house across the street already in that LLC, we're going to need to add the mortgage. Say that's a private mortgage, right? So let's add a mortgage line. This is for the borrower. It doesn't really matter who the mortgagee, the mortgagor is or whatever. We're going to click mortgage. Obviously, it's going to be in the name of John, whatever account number it is, blah, blah, blah. If it's a private mortgage, it doesn't matter. We're still going to type it in. We're just going to get that private mortgage statement. We're going to type in that it's got, 250,000 left. We're going to type in they got 5 years left on the note. And we're going to type in the amount, right? The important thing, not too much about the costs and any of this stuff, right? For a DSCR loan, they're not caring about this. They're caring about they need to know what the mortgage is this, and we need to get a supplement that shows they haven't been late in the last 12 months on any mortgages. So we're just putting this in just to, tag it to the file, tag it to a property so that we can look up there's no late taxes and stuff or any penalties or anything like that on the properties. They're just going to want to do a basic search and just see that the mortgage is paid and there's nothing crazy, liens or anything like that on the properties that are going to cause problems for this LLC that's now tied into this deal. Remember, an LLC that has a problem on another property is going to cause a problem on the current property. So the investor is just doing their due diligence. So you don't got to worry too much about this stuff. It's not on the subject property, so we're not going to put that. So once you get it in here, just make sure you get your mortgages in here, private, public, whatever they are. If they're on credit, not on credit, get all the mortgages in here. And then get all the properties here in the REO. So in this case, we have, their fake primary. They obviously linked that fake mortgage that they had before. And that's how we link those. Now, since we have another mortgage, obviously we're going to need to type in the property address and link that mortgage to that other property that's owned in that LLC in that case. So remember, just because the customer types in one property and just because their credit only pulls one mortgage does not mean on these DSCR loans that you guys don't have to do your due diligence. Remember, interview your customer. Ask what other properties they own. Ask what other properties are owned in the LLC. Is this a new LLC? Does this LLC exist? I do like to apply a lot of times. Let me switch back there. A little tip for you guys. On the lender page, a lot of times, almost all my loans, they don't have the LLC yet. They're like, well, I'm going to make one for 5879 Gregory, but I'm not going to make one until we're, into this process, right? So don't worry if they don't have it yet, guys. TBD LLC is no problem. Right? We need obviously an LLC to close, but we don't want to put their personal name here if they're going to close an LLC. Just because the LLC is not created or the corporation, whatever they're going to use, isn't created, put that in here. So if it's a corporation, it'd be TBD Inc. And in this spot, we'd type Corp. LLC is obviously not the same as a C Corp or S Corp or whatever. So those would be the couple options for TBDs. TBD is no problem, guys. Make sure you still set it, because we still want to let everybody know that this is not a standard deal. This is an LLC deal, business purpose deal. So let's get back to page 3. Remember, set up all the REOs in here. This is just for example. So if this was their primary, this pulled on their credit, great. If they pulled 3 other properties, we need to see if their LLC owns 3 other properties, excuse me, we need to see 3 other properties listed here. And if there are mortgages, we need to link those liabilities and those mortgages. So very important that those are all set. You will cause problems later if you have an invalid 1003, right? And something pulls up on fraud guard where that LLC or that person owns other properties. We're going to need to do a new 1003. So just nip it in the bud ahead of time, guys. Do a proper interview with your clients and put everything in here in the system. Now let's skip over to page 4. Not really much to do here. You haven't set the rents and stuff. That'd probably be the only thing we do here, but just the basics on the property, this should all be set already by the time we get to this page. The rents should be set here. This is the standard net rent monthly income, but remember we're using DSCR calc. So I always switch over to my custom page where I have that custom DSCR calculation built out for us, at our team at least. Gifts and grants. DSCR loans don't really use gifts and grants. Some do, which is crazy. Just make sure you read the guidelines, guys, because most of the DSCR loans that do allow gifts are after a certain borrower contribution. So usually you can have a small amount of gifts. Obviously you can't have a full gift like a FHA or anything like that. So this is very rare we use this. Most of the time it's not going to apply, so you can click not apply. It does not apply. Obviously we need to answer no here. There's no such thing as a primary DSCR, so make sure you fill this out. Sometimes your customers will, or you will reuse a 1003 from an old application or something like that that has some data. Make sure you properly set this. This is going to cause a huge problem if you submit a loan that says primary on the 1003, print it clear as day, and you're trying to do a business purpose. So still fill this out, guys. Obviously you guys should all know how to set this up. We're not going to go through that. Fill out your decks and all that. Fill out your lender stuff. In this case, it's all test based. Now let's go to the itemization. I'll do a couple tips there. Again, your company is going to have your own closing costs, so I'm not going to go over too much of this. So closing costs, all going to be different by company. We here at the Mortgage Calculator, all our DSCR loans have a 1% origination fee, and that's all we have as a fee. The rest is obviously in the rate. We also have a $7.95 processing fee on our DSCR business purpose, and a $14.95 underwriting fee on our DSCR business purpose, and $24.95 MERS fee. So this is how we set up our DSCRs. You guys will probably be a little bit different. So I'll check with your company, or if you join us, this is the typical non-QM closing cost that sets all this up for us with one click. Your company will probably be a little bit different. Obviously pricing isn't set yet. We haven't priced this yet. I'll do a quick pricing demo here at the end. We use obviously different vendors than you guys use, but we use $750 as a general estimate. Of course, you need to set this properly, guys. If you're on our team, please go to your appraisal schedule and go ahead and get the proper price in there. That's just a general number. Credit, just a general number of 100 should cover us. Tax cert this is the company we use. Obviously, we use CoreLogic for flood, blah, blah, blah. We don't need a VOE in this case. So non-QM sometimes has a VOE. In this case, as a DSCR, there is no income. So let's go ahead and delete this. A lot of extra fees that go into DSCR loans, but thankfully, this credit stuff won't be one of them. CDA, almost always have to have a CDA on a DSCR loan because the collateral is the loan. Remember, this is almost an asset-based loan. It's just on the property as an asset and the rents from that property, basically income. So CDA, collateral desktop analysis, typical product we use, but we charge $150 for those. We have a couple different vendors that we use. You guys will get asked for CDA at a lot of different investors and lenders. So make sure your company is set up to order CDAs. Typically the vendor is Clear Capital, but there's a few different vendors as well. We use a doc preparation, a lawyer, a law firm, Blackman & Graham, to do all of our doc prep and all of our closing. So in that case, we charge $495. That's what they charge. Obviously, the customer just pays that direct to them. That's just part of our fee. because they do all of our closing to make sure it's good for the customer and good for us, obviously. So we hire a law firm to do all the closing. On our end, you guys might have different closing costs there. Now, let's go into here. We're gonna need 12 months of insurance. So if your template isn't set up with that, make sure you throw your 12 months for your purchases. That's super easy. For your reserves, obviously, you need to set that up. For those of you who don't know how to do aggregates, aggregates are super, super simple. You do have to click the setup table. If taxes, I know for a fact in Miami, where I changed this address is, all taxes are due on 11/1. Oops, before 11/1, 20. And since this is obviously going to close next month when taxes are already paid, the next time we're paying taxes is 2023. We can't type any dates in here that are prior to our first payment, right? Anything that's due before our first payment needs to be in closing. So when we're setting up aggregates, make sure you never type a date less than this, right? So I know for a fact that's the due date here in Florida in Dade County. And that's going to set up my aggregates that is going to collect 12 months for that month plus 2 months cushion. 2 months cushion should be standard for most lenders, so this should be your setup. Now, remember, hazard insurance for a purchase, you're always going to renew 1 year from the closing date, right? So we're going to pay 12 months at closing, and then we're going to have to renew on 12/15/2023. So 12/15/2023 is going to be our renewal date on our insurance because it's a purchase. And boom, you see the aggregate is going to slightly change here because of the different due dates. The same cushion, though. We always need 12 months to pay this, but 2 months cushion in there as well. So when we click OK on this, boom, now we have a proper aggregate table. Hopefully you guys know how to do that. If you didn't, you just learned. And if you didn't do it properly, you won't see an aggregate adjustment. Remember, you're hardly ever going to have a zero adjustment, right? Because you're never really going to close on the exact end date of the month. So if you have a closing date that's a partial month, you have to have an adjustment. So if you don't have that, if you don't see a number in this box, you might have something wrong there. So double check all that, guys. Title charges. Again, every company is different. I have some basic numbers in here. You guys need to pull your pre-CD and fill it in properly. We won't go through that on this video. This is just a quick video. Obviously, you need all your fees. Your title fees shouldn't be different based on the LLC, usually, but definitely tell your title company that they're vesting in an LLC. They may have some extra stuff they want to do. There are extra checks in Texas. Make sure you guys plan ahead on that. At our company, since we hired a Texas law firm, Black Graham is a Texas law firm, they do the Texas LLC check. Most companies, if you don't have a closing attorney do your documents, you will need to send that LLC for review to your Texas attorney. So that is something that comes up on these DSCR loans because we're vesting in an LLC. There typically is an extra $100 to $250 fee that your company is going to incur to send those documents to a Texas attorney for review, both the closing package and the LLC documents for vesting. So typically you'll see an extra attorney fee. Thankfully, we have hired an attorney at our company that takes care of this for us because we do so many DSCR loans, and we do a lot of them in Texas as well. So that $495 fee we went over before that goes to Black Graham, that does include any attorney review. So at our company, we already have that covered. At your company, you might need to throw an extra attorney fee in here. So make sure you put that. It probably will be in section B though, because it's not going to be a choice. It's going to be your choice. So if the title company has an extra attorney fee to review docs, make sure you throw that in here. And if it's your company, it should be up here in B where we have Black Graham, right? So if you have a doc prep company like us, but they don't do the Texas review, you may have another attorney fee. So a lot of times we might see, well, we don't have it listed here, but you might need, let's say, another doc prep fee to a Texas attorney or an extra $250. And that's your company choosing the attorney. So you need to have it up here in section B, costs as well. Okay. So that might be something that you have on your end. Thankfully, at our company, we have that covered with Black Graham. That's a good tip there. Let's go back through title. So everything else should be based off your title company estimate, your pre-CD. Make sure you get that. They might have an extra fee for their end to review, specifically in Texas a lot of times. Government, again, set by your pre-CD. That'll be the same no matter if it's an LLC or not. So that should always be the same. So you shouldn't have to worry too much about that. Survey for Florida, we do have an extra survey fee, so that'll pop in just to cover us in case there is a survey ordered. Again, that's company by company, case by case. You do need your settlement service provider list. Thankfully, it's not a TRID loan, but you still want to be, proper, right? So I would still, if you're going to put a survey, still put it on your SSPL, all that kind of good stuff. Again, get with your company on that. And now we're at the end. So that's the end of the 2015. We're good there. Yeah, that's pretty much it. I don't think we need any other fields. Let me go to a couple other settings. This might be above the head of some of the loan officers, but if there are some company admins watching this that are wondering how to set up their DSCR tables, let me go through a couple business purpose fields on the back end that the LOs might not have access to. So don't worry, guys. If you don't have access to this, I'm in my admin account. I have every page that exists in Encompass available to me because I'm a full admin. You might not have this, but let's go through just for those of you who want to know exactly what to do with your Encompass or Calyx to set it up. Let's go to the ATRQM. So remember, this is a non-QM loan. So I already should have some of this stuff set up based on our templates. Now, if you don't have your company set up, you might want to check these fields, right? So again, DSCR is set in here. That's a good thing. But the ones we want to click over to, not qualification, that's obviously for standard loans, right? We want to click over to ATRQM. So there's a couple key things that should be in here. This is going to be an exempt ATR, right? This is not an ATR loan. There is no ATR on a DSCR loan. It's a non-QM loan, and there is no income of any kind. So that should be set. How does that get set? So typically, down here, it's kind of obscure. Keep scrolling down. Right here, ATR QM exemption. So we're going to say transaction is exempt from Reg Z based on it's a commercial loan. It's not personal, family, or household purposes. So in this case, just a standard business purpose is getting us out of the TRID and ability to repay and all that kind of good stuff because it's a commercial loan, business purpose. So we need to mark this. That will tell Encompass to stop doing some of the QM tests and stuff. Now, there are a couple other ones that you want to use. Typically, notice when, let me pull this, my loan templates up. Notice I have a 5+. A 5+ unit is a true commercial property. Remember, 1 to 4 is a quote unquote residential. A 5+ is a true commercial property. So anytime we have a 5+, we can just mark 5+. So you notice that's why I have a different template, because not only are we going to mark that it's not for personal, it's also 5+. So that gets us out in 2 different ways. So those are some fields that you want to set there. There are a couple other fields to remove them from your call reports as well. So we won't go through that. That doesn't even usually pop up on the standard thing. Actually, I believe it's in the HMDA is where one of them is. Yes. Okay. So under HMDA, you go into NMLS. There is, since this is not going to go on our call reports. You see here? So we have excluded this from our NMLS call report settings. If you're using Encompass to pull your call reports, this is the one thing you want to make sure you also have set up because it is a business purpose loan. It has nothing to do with the call reports, not primary and not a household or family purchase like it said on the other field. So this should be checked if that ATR QM page is checked as well, and that will help clear up your call reports, not have to do it manually. Just make sure that you have those DSCR set up to exclude from your call reports. That way you don't have to manually edit everything later. So those are the couple fields that I would set up kind of as an administrator for you guys to clear this up. But that's basically it. Now, the other thing too, when your administrator sets this up and they set up their e-disclosures, there are some special forms that your company should have set up and that we have set up at this company. So real quick, let me just go through for those of you who are at our company and are disclosing your own files that are senior loan officers that are watching this video. Let's go ahead and do a quick example of the disclosure package. We're always going to use the non-QM disclosures, obviously if it's conventional, whatever, but all the DSCRs are going to be under non-QM, and then we're going to add a few other documents to it. So let me click order e-disclosures. It's obviously going to tell me that the plan code for non-QM says it's conventional. Don't worry about that. We're not going to overwrite anything we've done, right? So there are some things that aren't going to match always, right? Because every non-QM loan is not going to be a DSCR loan. So those of you in our company, this is a standard warning. You didn't do anything wrong. We're going to skip importing, right? We're not going to delete other, which we took some special time to set, by overwriting it with conventional. That would be a waste of time, right? So we're going to go ahead and skip overwriting anything. We just want to make sure we're using the plan code. So yes, we're going to use that plan code. We know it's a non-QM loan. We know we click the right button, and we don't want to overwrite any of our data, right? Okay, so it's not going to let me click order. I got a couple fields that I need to set. This red field is required. So this is a good little demo for those of you who know how to use Encompass. I do love this disclosure audit. Lets me click that button and actually go right to this field. And of course, before I can issue an LE, I should have went to this page first, guys. Sloppy me. But we do need a LE date issued, so we'll put today. Again, this is an example. So now that I have that date issued marked, now this should clear, so I can click refresh audit. So that I'm still in the order e-disclosure menu. And now the button pops up since I've cleared that critical error. So let me click order e-disclosures, and you guys will see how our company issues the package. We're still going to use the LE because a lot of investors and lenders still want an LE. So remember, even though this is a non-TRID, regular loan, we're still going to use an LE for disclosures. We're still going to keep ourselves to those tolerances and whatnot because some lenders want DSCRs on the standard paperwork. So at our company, we're always going to do it as if it's TRID, but obviously I've marked all those non-TRID fields. So we're off the hook on the call report and stuff, but we're still going to print an LE because some investors and lenders want an LE. So you'll see here in this package, it's generating a bunch of stuff. Obviously, Encompass is slow. Everybody knows that. Just chill for a minute here. I'll show you guys some of the custom forms that we have set. Okay. So standard package, I still want to include all the basic conventional packages. So for those of you setting up your Encompass, I still, excuse me, recommend basing it on a standard package. The only thing I would take off is the HUD stuff. Obviously, totally not applicable. But most lenders will want some of the other disclosures. So please include those. Intent to proceed. Some lenders say for business purpose, you don't need intent to proceed. You can order appraisal whenever because it's business purpose. Some do. Make sure to still include that in your package, okay? Still include the equal credit opportunity, all that kind of good stuff. Here are some of our custom documents in yellow. So these are some things that I have programmed since we do almost exclusively DSCR non-QM. These are some of the forms that are very important to us. So these are kind of standard forms just for us as a company. Ability to repay, that's a custom form, so we don't want that on the DSCRs, but that does go into a custom version of the ability to repay goes in our non-QM. So I can exclude that specifically on the DSCRs, but this is the proper form for my non-QM package. So just know that's why that was in there. Affiliated business arrangement, I own a real estate company in Florida, so this is again just my company. Borrower contact consent form. This is one that one of our investors, maybe you guys use them as well. This is one that particularly LoanStream, we sell some loans to. They have a specific version. So let me double click this just to show you guys that I need to program some specific versions. So this is just the specific version of that form that LoanStream wants. So I've programmed that in to go in all our packages in case we sell this loan to LoanStream and we have that covered. So you guys should also try to set up all your investors specific forms in here like we did. Business purpose certification. As I mentioned, since we do hundreds of these DSCR loans, we have a general form that all of our investors have basically approved. So when you see our form, this is a pretty basic one. So this is just a general one, and we have our statement there that we typed in on the custom page, and that printed physically on this form. So this is the form that they're going to sign as part of their package that we're able to use for pretty much all of our investors for this borrower certification of business purpose use of funds, right? This is one of the DSCR specific forms. And a couple other ones. Some do still want the tax transcript, which is weird, so still include that. I would. I don't want to not have it if I need it, right? But of course, some borrowers might complain, so you might be able to take that off. Occupancy certificate, super important that you have your occupancy certificate that again tells you that it's a business purpose loan, basically. So Make sure they sign this. This is an investment property. We have that on there, etc. And a couple other ones that if you take the time to build, obviously, why not QM? That's a pretty standard form you guys can get from any place that I would include in all your non-QM packages. And now we can add additional docs. So all of our team gets trained to also go through and see if there's any additional docs we need. In this case, if you don't have the business purpose, it's obviously included there in most of our packages, but if you need it, you can add it. One thing we do need to add that we don't always know is what kind of corporation is this? A lot of times we need a corporate resolution for most of our DSCR loans, right? So we need to say, yes, this is my LLC. Yes, I am the manager of this LLC. Yes, this LLC is authorized to borrow this much money for this property, right? So there's also a corporation version. So this is one form that we want to always add, a custom form that I built for our company that you guys can build yourselves to all of our packages. So we have it to go to anybody. There's not really any other ones that you would technically need, but if your company has any, go ahead and put them in here. And in this case, this is an LLC, so I'll go ahead and click add on this so you guys can see how I would actually do this if this was really my deal. I think we put TBD LLC, so in that case, TBD LLC is not going to be a valid form, but as long as I have the name of the LLC, like on a refi, this would be a no-brainer to include in your package, right? Because it's going to have the proper name. But let me go ahead and click it so you guys can see kind of what it looks like. Come on. There we go. Member resolution of TBD LLC, right? So this isn't valid because it says TBD. If it was the real LLC, great. They can sign this and use it. And we do have a notary block on here because some of the investors and lenders want a notary on this form. So obviously in Encompass, they're just going to sign it and that'll get us past the conditions usually, but then we'll include this in the closing package as well, where they can actually notarize it again and sign it again. So a lot of times we'll get this with just their signature and that'll clear the conditions so that we have a document on file for conditions, but they'll also reprint the version of this in the closing package at a lot of the investors. So some version of this should be in your closing package to get out of conditions and get yourself ready, because this will clear your conditions on your submission package. I recommend include this on your submission package, and your customer can sign it and get you off the hook on some of the LLC stuff as well. So those would be the things I would do. Obviously, click send, send your disclosures like normal, customer e-signs like normal, all that kind of good stuff at our company. And when I do it, I send it from the loan officer if I'm doing it on behalf of the loan officer. But hopefully that gets you guys set up and gets you guys a disclosure out the door for your first DSCR loan, since there's so popular these days. So let me go ahead and exit this. Again, let me go back to my site just to promote it. Excuse me. Pull it up here. So again, if you guys want to check out our rates, it's obviously not going to let you see them without putting your info in. So let me go through it again. You can click on mortgagecalculator.com. You want to check out our live rates, you can click on non-QM rates, set it up. So let's say Florida, whatever county, let's say 5 years. Also, you can do foreign national, right? So foreign national, very popular. We do a ton of foreign national DSCRs. So if you're a foreign national working with them, you can check out our foreign national rates. Most of them are going to be citizens, 5 years DSCR. We can bring the FICO up or whatever. Loan amount 500,000. LTV, let's say 70 LTV. Show rates. Obviously, we need to put some info in. So let me put some of my fake info in here. And boom, now you see our real live rates, right? So these are 3 best priced rates that are coming live from our pricing for real investors. And you see we have 7 others, right? So if you guys run our team, you would see the whole optimal blue, with all the good stuff and all the different options and who the actual lenders are. But in this case, we're just trying to show the public just some of what we have, right? So right now, our best DSCR, as long as the DSCR is over 125, is an 8.5 rate, which would cost them, 0.75. So that's a great combination. And if they want to go ahead and start that loan application, they can click apply on our site and instantly start loading docs and applying for their loan and stuff. So that's how our stuff works. You see my pretty face up here. So that's how our software works to streamline that for you guys, get your customers in there, get them checking out rates, but you guys can also check out our rates if you guys are professionals. Check us out. If you guys do want to join us, again, we would love to have any loan officers out there that are doing DSCR loans, that are interested in DSCR loans. That's what we specialize in. You can come to our site, click on careers, join as loan officer. We got a little promo video here that kind of goes through how we work, all our different options, and of course, all of our compensation. So we got some great compensation here on your DSCR loans. And we got some great rates as well. Since we are the lender, we have access to banks and investors that specialize in the DSCR products. So that's it for today. Let me go ahead and stop sharing. So thank you guys for tuning in. Hopefully you guys can start killing it with some DSCR loans, and good luck.